All right, when we look at a trend, I'd like to look at the highest time frame. So right now we have the USD CAD. I'm looking for where the market, we can look at the longer term trend. Is it in an uptrend or is it in a downtrend? So we want to establish the fact where the trend is. The trend is up. Here was a low, a high, a higher low, and a higher high. That started the trend to the upside. Then you have a higher low, a higher high, higher low, and then we expanded to a higher high, and now it's putting in another higher low. So on this particular chart, we see the market is in an uptrending market right now. We also see that potentially you have this A to B, C to D relationship. But for now, we see the series of higher highs and higher lows is establishing it as a trend. I'd like to look at my indicators, my MACD, what we call a 310 oscillator, and that has corrected down and is now starting to turn up. Okay, which you don't have to worry about at this point. I was just pointing that out. Now I want to drop this down to a lower time frame, and let's start looking at where support and resistance is. But first, let me find my drawing tool. Okay, if you look here, took the recent swing low. So you can look at these recent lows and you can see that the market from this swing low to this high right here is an area of what we call commonality. All right, can you see what I'm drawing on the chart? Let me just double check. Okay, I have to fix my tool here. All right, so what we did was, I'll do this again because I was realizing it wasn't recording properly. So for my chat room members, I'm just going to redo this. So I took this swing low to this swing high. I took this swing low to this swing high. And basically, they give us retracements, 38%, 50%. And right here in this zone, you see a commonality between the 38% retracement area. So that is showing us that the market is finding support. What I'd like to do is I'd like to look at prior swing lows. See this? All these little lows. And if I got two or more areas of commonality, like we do here, that's good. That tells me it's a little bit of a confirmation for support. What you really want to end up doing also is looking at price and how it's related to prior swings. All right, let me get rid of this. All right, on how price works with prior swings and also on the shorter term time frame. So what we're going to do is we're going to drop a horizontal line. As you can see right here, if I drop that horizontal line, we can see that the price has related to all this action back in the past. So current market here relates to anything that we have in the past. The market is going to see it and use it as a support or resistance. So we see that right here there's a whole bunch of gobbledygook at the time. It created some resistance, but now that the market is above, it is now going to act as support. So that's another thing we could look at. We want to drop this down and start looking at the daily chart. What is the daily chart telling us? Daily. That was a weekly chart. So now we came in and we see that the market has been in this uptrending mode. We also see that the market has had a correction. And we see the correction came in the form of an A, B, C correction. Market attempted to go higher, put in a higher low right here. And we could also consider this basically a double bottom. What is a double bottom? Well, the market came down, came up, came down again, held, and is starting to turn up. So that would be considered a double bottom. When you have two data points, 1, 2, just like here, 1, 2. When you have two data points, that creates a resistance or a support. And in this case, that is a support. Other things we look at are, we look at harmonic patterns, we look at other things, and I'm going to get into that in a moment. So why did I look at this in terms of that retracement? Well, if we end up let me just show you here. No, not that one. Oh, here it goes. Okay. All right, so in a trend, we basically like to look at these corrective waves. We like to look at retracements. And once we started hitting into this zone, we started finding support. Now, if you recall, in our prior videos, we had looked at the USD CAD. One of the things we looked at with them was this, if you recall. The market is always trying to find D. So we have an X, an A, a B, a C, a D. So we looked at the market. The market had found, if you recall, the market had found support. And then right here, there was a short-term area where the market was pausing and trying to give a shot to the upside. I think it was about a week or so ago. And we took the buy, and the market went up, ended up coming back down. We took it out at a break even, and now it came all the way back down. And I'm going to show you another harmonic pattern within this. Put in a higher low and is now turned back up. It's basically confirmed that this higher time frame is in place. When this started to fail, when it started to fail, it basically told us that we can trade down all the way down again, potentially. Meaning that this market could have done something like this. Okay, am I willing to hold the market that long? A trade? I'm not willing to do that because it's not doing what I wanted to at the time. You get out, you start over again. Because we have that higher time frame pattern in place. And then market did this. One. And it created that little harmonic pattern within the larger harmonic pattern. Okay, you see that? And now this has more of a potential to go a lot higher than we originally looked at. We look at this swing right here, and the first area to the upside is, we would look at an A to B, C to D relationship. Where can the market go? From an A to B, C to D relationship. We will also look at this high to low plus a retracement zone. So now, since the market has turned up and has found support, I want to look to buy it, and we're going to look at the other time frames but we're keeping in within the structure of the Elliott wave, of harmonics, of retracements. Everything comes into play. So what are we looking for? Do we want to buy it here? I don't want to buy it here. I'm not ready to buy it. But we're mapping out where the market can go. We're always looking at an A to B, C to D relationship. Same thing here. This is an A. I'm sorry. This is X, A, B, C, D. Just because D landed here and this put the higher low, it's still valid. D is still valid. If this would have came lower, it would have created a new D. But the fact it held, that's great. All right, so we're always looking for that A to B, C to D relationship. Keep that in mind. So now we have that small harmonic, we have a double bottom, and we have the larger time frame bullish flag that we just discussed. All right. What is a bullish flag? So I'm going to use this as an arrow, like that, like that, like this. All right. That's a flag pattern. Essentially, here is the pole. Here is your retracement, which we look at that 38% retracement. That's the flag, like you would have any kind of flag from any kind of country. And then the continuation. All right, and this is also called a continuation pattern. A flag is also called a continuation pattern. So now we're going to drop down to the shorter term time frames and start to look at what's appearing for us. Let's check the next highest time frame. This is the 240-minute chart. And we want to look at a couple of things now. We want to look at a few things. Number one, we have that double bottom down here. Okay, the market found support down there. We see that. Market held. And the main thing was, after it found support, what happened? Okay, just bear with me for a second. Market had very, very strong impulse to the upside. The upside swing was much greater than the swing that came down. You see this? You could even see this on an MACD. The swing up was greater than the swing down, and it's starting to what we call shift the momentum. The momentum is going from down to up. It's starting to shift that momentum. So since it's starting to shift that momentum, and we have two data points down here as a support, that's telling me that any pullback down now should be supportive. We should not get down here again, and that we should continue to see a trend, a turn up, higher highs and higher lows. So that retracement, this is going to be an A to B, C to D retracement. Okay, that's one part of it. That's what we call an alternate wave equality. It's an Elliott wave pattern. It's within the Elliott wave structure. For instance, in an Elliott wave, if you've read some of the stuff that we have on the site, it goes from 0 to 1, 1 to 2, 2 to 3, 3 to 4, 4 to 5. So within that structure, we have these data points right here should relate. These prices should relate. So if this one went from A to B and 10 points, this right here should go about 10 points. Rough plus or minus, because you also could put Fibonacci retracements and extensions on it. We'll get to that at another time. It's not generally important. So what we're going to do now is, if that market can come down that far, you're going to look at the price structure and how it relates on from C to D to A to B, and also retracement from B to C down to D, meaning that this type of retracement, And then we're also going to include this swing here on how it relates. All right, the length of the swing and the length of that swing. That's how you start getting that commonality that we want to look at. So we got to shift the momentum from down to up. That's great. Does that mean if you didn't buy here, you have to buy up here? No. The markets always retrace. You could see they always have wave patterns. So the thinking right now is where is the wave going to be? So if we're starting here, all right, that's going to be your 0 to 1 and 1 to 2, 2 to 3, and so forth. Within this structure right here, we're going to look for an ABC correction. And I'm going to show you why we're looking for that ABC correction. Now, how does the market work? The market goes like this. In its simplest form, Elliott wave 0, 1, 2, 3, 4, 5, A, B, C. You see that? So here, I'm looking for an ABC corrective wave within this pullback, and the reason why is within this structure up, we had that, what we call a 5 wave, okay? It's also called 3 drives up, 1, 2, 3, however you want to call it. The market has the symmetry on the way up, and then it has corrective patterns on the way back down. And it's inverse. If the market was going down, you'd have that correction up. So we would look at that. So let's take a look at a smaller term time frame for now. So now we're zeroing in on the smaller term time frame hourly chart. So let's look for the wave pattern. 1, 2, 3, 4, and it's still getting that 5. So wherever it may land, it can come up here, it can come here. We're going to look for that process to happen. So this is 0, 1, 2, 3, 4, 5. Now the most important thing, well, one of the most important things in the Elliott wave is that swing from 2 to 3. That should be the largest swing. And then the swing from 3 to 4 should be 38% or less than the swing from 2 to 3, or even from 0 to 3. So having that criteria that this leg, the 2 to 3, was the longest leg up so far, and that you have a shallow retracement here, that's telling me that the 5 wave, the 5th wave, is in the process now. We also want to look at the past and see where support came in. So here was some support down here. You see this? So that's telling us that the market respected this area. And eventually at some point, it could come back into play. But the main thing is right now is we're identifying the fact that the market is having its 5 wave up that we just discussed, that Elliott wave pattern on the hourly chart. So if the market is coming up on its 5th wave right now, would it really make sense to buy? You're buying at the end of a swing, and you don't want to do that. You want to sit and wait. So you don't want to have to feel that you missed a trade, because you still have that higher time frame that we talked about, that much higher time frame, that bull flag on that weekly chart, okay? Had that pullback. The daily chart, what did it do? It had that ABC down, made the double bottom, turned up. We had the 4-hour chart, which is a 240. All right, we had that basically showing that little double bottom, and the market starting to show impulse to the upside. Now we have the 60-minute chart showing that from that bottom, it did this. All right, so as you see here, the weekly chart is saying that the market is a buy, but doesn't mean you buy right here. The daily chart shows that the market's confirming that buy. It's made a double bottom. And if you didn't get into the trade, it's not a big deal. You wait. The 4-hour chart is showing us that there's impulse now on that time frame to confirm the double bottom and to confirm the weekly chart. But the hourly chart, the H1 on your MetaTrader, is showing that the market is now having that 5-wave up. That 0, 1, 2, 3, 4, 5, and that you're looking for that corrective pattern back down. Essentially, you're looking for that 4-hour chart to correct, or this daily to correct a little bit like that. And that will start that process of much higher trading, a much higher swing. Okay, so looking at the hourly chart, what's the next play? We could sit now and look at the hourly chart, and we also could identify where resistance is going to come in on the hourly chart. Okay, how are we going to do that? So where there is support on the higher time frame, there's still resistance above from the prior action. We still can't discount that. Now, a person could short this and get away with it, or a person could wait to buy it. It's up to them. So let's start drawing in, and I'll draw it out for you first. Okay, hold on, not yet. All right, there we go. Let me draw it out for you first and show you what I'm looking at. Because there's always harmonic patterns in the market. You just have to look and identify them of where the market can find these patterns. So here's an X. You're always looking for A to B, C to D. Here's an A, B, C, D. All right. So now that we've marked that in, that pattern, you can see the harmony. And basically what we're looking at is how X down to C relates to D. We're looking at how B down to C relates to D. All right, just at its basic form. So let me draw it in. Retracement patterns. So we see the 786 to 886 area. I have it at 79, 89%. And we also see this. Okay, so let's draw that in again and let's identify things. All right, we have a X, A, B, C, D. So let's think about this. We're coming into an area here and here. Basically, this general area, I like to look at this little sweet spot here, the 786 to 886 retracement. You also have a 162 and a 141 extension. And the extension is coming from B to C, extended up, 162, 141. Now, if you look at the prior videos, you're going to see that phi, which is 618, or 1618 and 618, you have small and big phi. Phi, PHI, with the big P, is the 1.618, and the small phi, small PHI, is 62 per 618 retracement. If you put them in, they're basically inverse to one another. So what we're discovering now is where resistance is on this particular chart. A person can look at this right now and look at this on their view as a short. There is nothing wrong with that because that market can come all the way back down. There is nothing saying that this can't do that. It can come and retrace. We're expecting that. We're expecting that wave to come like this on a bigger time frame. Why? Because within this structure, you have that 0 to 1, 1 to 2, 2 to 3, 3 to 4, 4 to 5. So you're seeing how the market moves in waves, it moves in corrections, it moves within a trend. So right now, the trend from here to here is up, but we're at the end of the trend up, looking for that to retrace down. We're looking at the end of the trend up also because technically we're still in this big range, So we're looking for this on a retracement also. So this area right here is a big retracement zone. Since it's a big retracement zone, you don't want to buy there. You'd like to see it come down. So let's eliminate all this. So we understand where resistance is and why we wouldn't buy, and we understand why somebody could short. It's technically they could short right here, risk up here, and they're safe. Nothing wrong with it. That's a good trade because the harmonic pattern works, and technically it's still in a downtrending type of market. All right, on that daily chart, it's still in a downtrending mode. Although we have confirmation down there, the market's been downtrending. It still has to keep testing. All right. Overall, bigger trend up. Smaller trends are still starting to transition from going down to up. All right, as we just shown. So let's get rid of this information here. And we know now that the next phase for this market, and this is how I roadmap things out. This is what I do typically when I look at the market. All right, and right now I'm looking, so you guys know we're watching the S&Ps also. And let me just stop for a second. Let me just show you what we got going on with the S&Ps. They're still in this bigger triangle. It's 11:40 in the morning. I think this afternoon we'll possibly get some good play. I'm not going to mess with it right now. So let's go back to our current discussion. So we know that the market can still push up a little bit higher. So let's just say it goes here, right into that zone. And whether it's here or there, we're just going to call it right there. If maybe the fifth wave ends in this zone, we want to start looking at where the market can retrace. So watch how this is how you want to look at those harmonic patterns again. Remember, we looked at the harmonic pattern and we had it on the market retracing. Now you're going to look at the harmonic pattern within a trending mode. So we see that the trend overall is going from low to high. We know that the market can retrace, and it's most likely going to find some support. And then we're going to look for this to rally up and then to pull back. Once we start seeing that retracement down, and we also want to look at prior swings on how far the market can come. All right. Then we're going to start drawing in our harmonic pattern. So let's take a look at how far the market has went down in the past. So we see that any retracement down possibly, let me get rid of this, 38 to 50. Okay, now we're starting to see where the market, if it retraces, what it can give us. I took this swing here and this swing here. Remember we talked about the A to B, C to D relationship. Also, from this swing high to swing low, you have retracements within that. Doesn't mean that the market has to go 100%. It can go a percentage of this whole swing. Likewise, from this low to high, it's going to be able to hit these retracement zones also. So we're looking at commonality. We're looking at a pattern and what can form next. Low to high. Now we're looking at a retracement. How far down can the market retrace? Shift its gear. Give a test back up and tell us that the market stopped going up, that the fifth wave is completed, and now we're going to get the ABC correction, and then a correction down. What we end up looking at is a couple of things. Here is your A to B. Here is your C to D relationship, right? We just discussed that. The market also has an A to B, C to D. So the market on the way down can also have those equal lengths. So if this was 30, this potentially can be 30 from the high down. And if this was 10, that most likely can be 10 or a derivative of it. But we know right now these higher time frames, these bigger swings, here are your retracement zones to watch. And this is how I map stuff out when we actually look at the markets for a buy or a sell. This is kind of the stuff that I look at. And I start to look at where the market can retrace. Where can it retrace to? Now, I'm looking at this right here. Let's just say we're looking at 88 to say 86. All right, right in this zone. Right in there. Well, if we have our risk all the way down here to start, it's maybe about 60, 70 pips. Say 60 to 70 pips. So if we were to go and look at the market in here, or even in here, and we buy it as this market's coming in, we have a risk point down here. I'm not concerned that the market is going to come down here. I am not concerned at all because overall the trend is shifting. But sometimes the market may want to come a little bit deeper, but at least we identify our zones. So once we start getting this corrective wave, we start to zero in on a price zone right in here. You don't want to put your risk in the noise. You don't want to put your risk in the noise. You don't want to put your risk in the noise. You want to keep your risk around the prior structural swing high, swing low. Here's what they call a structural low in the market. That market could, what if it does come down a little bit deeper, right? It's all patterns that we're looking at, but what we are identifying now is the market can come in and form this A to B corrective wave, this pullback, this relationship, and you're estimating that this is the zone that you're going to want to watch. You don't want to buy the market up here, and if it goes higher, it's no big deal. We have 30 other markets we could watch, but when you start watching a market, you want to identify the best zone to get in, okay? Let me show you a trade we did the other night on, so that's what we're looking at on the Canadian dollar. If you recall the other night, we had a trade that we did. It was in the Japanese yen. What was I looking at? Now, we had multiple trades going on at one time, and I'm going to show you the Japanese yen. I'm also going to show you the GBP that we did. This also, all right, this also has told us that there's lots of structure down here, and that potentially we can have another wave up. So we did have that pullback down for a trade. Now I'm looking at this market saying to myself, well, this can start to find resistance. All right, it could start to find resistance now because we're having some harmony up in this area. So if you recall, we took a swing out of the Japanese yen, but it's also into a higher time frame. You want to be very, very careful with that. Okay, so let me also show you another one, a GBP. What did we trade? The GBP CAD, I think it was, right? Yes. Okay. So let me show you what I'm thinking about in terms of the other market that we just looked at. We have a higher time frame trend up, right? A higher time frame trend up, found support, but then we're going to break it down to that little time frame. Right? Actually, let me show you on another chart here. Here it is. Okay. Same scenario that we just saw the other night, where the market ended up having its correction, everything's done to the downside, and now you're starting to look at the market on the upside, that shift in momentum. So the market shifted its momentum greater than it was going down, right? And you had that pull back down. We went long. You remember that? And then we caught the rally up out of that. And then the market went sideways and is going up again. My trade, I was just looking for that swing. I basically was looking at the same thing that we were just discussing in that USD CAD, the same thing we were just discussing it, same type of shift. Here, in this particular chart, what are we going to look at next? Market did its wave. Once it pulls down again, we'll look at another area to buy and look for another shift up. I'm not going to buy it here. We just took a trade. It's done. Now we could wait for a much larger pullback and for a much larger move up because the higher time frame is telling us so. But more important, that shift in momentum, you had that A to B, C to D relationship. Everything came into play. It set up a trade for us, and ba-boom, we caught a nice run. And it took hours to do. So looking back at the USD CAD, you're taking all these different time frames, you're putting them together, and you're going to start mapping out your game plan. And what you always want to do is look at the market. What part of the structure of the trend are you? Are you looking at the market on where it's up at the fifth wave and you get momentum, or is it just starting to break out of a trading range? For instance, let's just say somebody got aggressive and bought it down here. That's fine. You know your risk. Now that it's expanded, but you don't want to buy it up here. This is now its momentum. Higher time frame is on a buy. Doesn't mean you buy it there. Let the market rest. Go for a bigger play. All right, so this is my thinking. This is how I tie in Fibonacci, Elliott wave, the Dow theory, the trend. I put all the structure, I put harmonics together, and this is how we look at the markets on these different time frames, these higher time frames, and how you really want to trade it. When you're looking at these other markets, like right now, you're looking at the S&Ps, these things are up in the moon, up at all-time highs, and now they're just needing to keep consolidating. So here, you would open this up, and you're now consolidating a huge move. Markets go into these sideways ranges. They do this. After a big move, they'll tend to do 1, 2, 3, 4, 5. All right, and once they've tightened up enough, then they start to expand up or down. So this is what we call an indecision area. Right now, this is all indecision. All right, the market is in the middle of a trading range, indecision period. All right, even though it's at an all-time high, we're going to stick with the thought that the market can go higher, but we also want to be aware that when the markets go into these triangles, it's also an indecision area. Basically, it's a tug of war. And you know what tug of war is. Okay, got your water here. Got all the water here. And you got the land here. And you got the people. Right? They're here. There's like a bunch of people. And they got this rope. All right? And they got the knot right in the middle. Okay? And whoever pulls the other one in, they all come to one side. Same thing with this. The market is right now in the middle. There's a tug of war between buyers and sellers. As you can see, it's obvious. And at some point, one side is going to lose. Everybody's going to fall in the mud. Or with the market, it's going to expand to one side. So it depends what part of the structure of the trend you are in. And that's how you trade it. That's how you treat it. So we did about a good 40 minutes worth of education this morning. We found a good market to work with because we've been watching it. So the USD CAD, very, very good market. And again, the GBP CAD also, that's another one that we could watch again. And we'll continue to watch it. And as it forms and as it pulls back, we'll know that we have a good, safe area to buy within the structure of the higher time frame. And we know where we could put our risk, where it should not go. Okay, I look at the market of where it could go, where it should not go, and that's how I look at it. So I'm going to wrap up this video.